Sure, look, I think there was a lot of concern, and I think what we've had now is we're certainly at that inflection point, as the report shows. And I think particularly London, actually, there's been quite a solid uptick, sort of up 13% on last year. We've seen a huge sort of increase in investment volumes, particularly in student housing and hotels. And hotels actually, a billion was transacted, £1 billion in the first 6 months of this year. So, look, cautious optimism, and I'm sure we'll come on to the budget in a minute, but I think we're certainly starting a new cycle here in London in terms of real estate investment.
The only thing I'll say, Jace, is I'm a long-term Londoner as well. I actually now live in the middle of nowhere in Sussex. But the point is, I lived most of my life in London. And when I get on that lovely boat that can go all the way from, let's say, I don't know, Richmond or Putney, all the way down to Greenwich, the amount of real estate and new real estate that has been built, especially in areas that used to be called, like Vauxhall, for instance, now called Nine Elms, quite stunning amounts of property on the market. The inventory is enormous at a time when non-doms are getting attacked quite heavily. Buy-to-let owners are getting attacked heavily, potentially as well. The incentive to build new at the moment, it's got to be on hold for many people, again, with those concerns about the budget and what Rachel Reeves may or may not do.
Yes, so I think in residential in particular, obviously the London and Opportunity London, we look at commercial and resi and infrastructure and a whole range of asset classes. But I think there is a lot in the resi that's still difficult in terms of, viability, financing development. There's risk, as you say, in terms of some of those taxes coming in. But I think I was just at Labour conference and last couple of days, and I think there feels a shift in the last sort of 3 days in terms of, I'm hoping, and a lot of us are, there'll be some more incentives, particularly in capital investment. And I think every conversation we were having in Liverpool, the housing came up. And I think there's a real need that we need some different sort of asset classes, more student housing, build to rent. There's a lot of opportunity for that in London still. So more optimistic on this side that we'll see some shifts in policy and some tax incentives to hopefully release some more supply into the market.
Jace, it feels like any change that we're going to get to see in the housing market around volume will be delivered from the Bank of England, not from the Labour Party at this stage.
That's fair. Look, and I think we did a survey with JLL that's tracked about 800 global investors, and they're sort of forecasting 3 or 4 interest rates cuts in the next 12 months, which I think, again, shows that is going to obviously be a main lever in unlocking some of that capital. But I have to say, the private equity guys, some of the private funds, the family offices, we've seen, as I say, quite a lot of volume come up, and particularly the last 3 months, actually. So it does feel, from everything we're looking at, we are starting a new cycle here in London.